Now, obviously, a little deeper into how your money grows, right? We know that it grows by compound interest, but how does the value of something go up or down over the course of a day? Well, in its simplest form, in the markets that we have, especially in America today, the price of what you pay for something is very heavily impacted by the concept of supply and demand. Okay. And you may think, well, how does this work for a stock, right? Or a mutual fund or an ETF or a bond? Well, as more people sell a stock or a bond or an ETF, mutual fund, whatever it may be, then it will go down in value. Now, why is this? Because if I am to sell it, right, then, and somebody else comes behind me and sells another share and sells another share and sells another share, right? Then people are going to be willing to buy at a lower price because the demand for these shares is going down because more people are wanting to sell. And that decrease in demand goes about decreasing the equilibrium price of anything. If you've ever learned that in economics, supply and demand, right? So less demand, right? There will be lower prices. More demand, there will be higher prices. So as more people want to buy and as more people buy, prices will increase of different securities. And that's how, in the short term and even in the long term, the price of whatever you own continues to increase. The price of whatever you own continues to go up in value. Because if something that you have is wanted, right, it is wanted for a particular reason. Now, within the stock market and within a mutual fund, ETF, whatever, what's being attempted is to find the correct actual value of something, the fair value of something, right? We want to know exactly how much a particular company's worth at a particular point in time. The problem is there is no perfect way to do that. Okay, there are ways that you can get extremely close and you can come close to some idea of quote unquote intrinsic value, right? The value that something is worth today. But that does not mean that you are correct because you had to make a set of assumptions that are likely not going to be perfect in order to come to that idea of intrinsic value. And so when we are trying to find whatever that value is in the market every single day, every day we are overshooting or undershooting or whatever, right? We're overreacting, underreacting, or, maybe we're overreacting in a downward way or, underreacting in a downward way, whatever it may look like, right? We are not getting it perfect as a market, but we are continuing to trade, continuing to see who wants it, why they want it, things like that, in order to come to some idea of around the price that something is worth. And a good way to look at supply and demand and a good way to understand it, as much as I have, talked about, I don't think this is a legitimate investment and something that you should be putting a ton of your money in. But let's think about Bitcoin or other cryptocurrencies, right? Cryptocurrencies and let's say commodities, you can put them in with cryptocurrencies, things like gold, silver, copper, and then other wheat, corn, whatever it may be. All of these things, the price of these things is only impacted by supply and demand, right? It's only impacted by somebody wanting to buy it, and we see this, right? Especially with gold over time, we've seen this as the stock market has taken dives. People have run to gold because they think it will be a good store of value. Whether or not that's correct, I mean, I'll leave that up to you. But they run to gold in a similar way. And Bitcoin's been a little bit different because Bitcoin, the price of Bitcoin has actually run closer to what the stock market has done than what gold has. But people can run to Bitcoin, and the only way Bitcoin can go up in price or down in price is it goes up in price when more people want it for some reason. I mean, Elon Musk lets out a tweet that says, hey, I like Bitcoin. Or, people don't want it as much because maybe Elon Musk lets out a tweet like he did not long ago saying, I think Bitcoin's a little high, right? Meaning the price of Bitcoin's a little high relative to what it should be. And then people sold and it dropped pretty precipitously from there. And so you can see that idea of supply and demand there. But with a company, right? Even though the stock is dictated by supply and demand, that supply and demand are actually dictated by something. And that supply and demand are not just dictated by market sentiment as it is with gold or Bitcoin or whatever it may be, but that supply and demand is dictated by company fundamentals. It is dictated by the projected growth of that company over time, the fundamental aspects of that company, their assets, their earnings, their operating margins, their all these specific things about the company, their leverage, all these things, right, are going into the calculation of what this particular company is worth over time and what we should be paying for them and how that should be growing. And obviously within a mutual fund or ETF, you have big groups of companies or big groups of bonds or whatever it is that is within the mutual fund or ETF. And as those things grow, whatever percentage of the mutual fund it is, that will go up in value, and then they end up moving in a certain direction based on whatever is weighted the heaviest within that particular mutual fund or ETF. So that is just a general idea of how things move, how things are moving within a stock market or within different types of investments that you may own. It's all driven by supply and demand, but supply and demand may be driven by some underlying fundamentals. And with things like Bitcoin or gold, it's not, but with things that are tied to individual companies, it always is, right? The fundamentals are tied to the price. The fundamentals are tied to what's going on in the market day to day. And again, we may see overreactions, underreactions. That's why it's important as a long-term investor to be able to put your head down and not just look at price all the time and be scared when price drops or be super elated when price increases, because we can overshoot or undershoot what things are actually worth at any given time.